Thanks everyone for joining us for today's webinar, looking at My Aged Care. I'm Andrea Salmon, I'll be today's facilitator, and Carmel Williams is online to present the material today. We start all our programs by acknowledging and paying respect to the traditional custodians, past and present, on whose lands we meet, and we acknowledge the deep feelings of attachment and the relationship of Aboriginal people to country, and we respect the cultural authority of the elders in each community. It's my pleasure today to introduce Carmel Williams to you. Carmel works up in the Shepparton office of the Financial Information Service, and that's part of the Department of Human Services, and Carmel will explain that in a minute. We just let you all know that the information presented today is general in nature, and so you're all encouraged to seek further advice to make the information relevant to your situation. So I'm going to pass over to Carmel now to lead us through today's session. Thanks, Carmel.
Thank you so much, Andrea. As Andrea said, my name is Carmel Williams. I'm a Financial Information Service Officer with the Department of Human Services Centrelink. I'm located in rural Victoria in Shepparton. Hopefully we all know where Shepparton actually is. But because we will have time constraints today, I'm just going to run straight into it. Andrea, if you wanted to flick the next slide over. Today we're talking about understanding aged care costs. So as I said, I'm part of the Financial Information Service. I'm not quite sure if anyone's actually used this service through the Department of Human Services Centrelink in the past, but we provide free, confidential service that is available to everybody. You do not need to be in receipt of a Centrelink payment or allowance from Centrelink in order to actually use this service. Completely confidential. We have 1 hour interviews with a financial information officer, a service officer, and we can go through a lot of different parts of information with you: financial options, financial planning principles, general tax and social security implications, superannuation investments, and different investment choices with regard to managed investment shares, etc. We are an information service, so we are not financial planners, and we will not be able to give you advice per se and tell you what to do with your money. If you would like to flick the next slide over for me.
Yep.
So we don't actually advise anyone to invest in particular products or run with particular providers. We aren't affiliated with any fund managers out there. We are completely unbiased and information service. So as I said, we don't tell you what to do with your money. That decision is yours. You are the best person to determine what you are comfortable with. We can also look at letting you know what your eligibility may actually be for pensions and allowance. However, we do not assess pension and allowance claims. Again, not financial advice, but completely free information. Flick over the next slide if you would, please. So today's presentation, we're actually going to be talking about both residential care and home care fees, the fees and charges associated with each particular service, the family home and the implications of what you may actually like to do with that family home, and some pension considerations. If you're looking at entering aged care, there are certain things that may actually impact on your pension if you're in receipt of a pension. So we can talk about the best ways to actually have a look at that as well. So if you would like to flick over the next slide. Now, the information that is contained on this presentation is applicable as at the 20th of September 2019. We index, according to CPI, all of our pensions and aged care fees, etc., on the 20th of March each year and the 20th of September. So these are the new rates as at the 20th of September this year. We are talking about the information in relation to aged care fees and charges for residents who entered residential aged care on or after the 1st of January 2017. The rules have changed significantly over the years. to cover all of those rules would take too long. So we're only going to concentrate on the most recent rule changes. And if you'd like to flick over again. I'm not quite sure if anyone's had a look at the My Aged Care website, but basically, if someone is looking to know more about entering aged care and finding out the services and what the Australian aged care system is all about, this is the best place to actually look at that. It's the government's first entry point for the aged care system. It was introduced on the 1st of July 2013 to alleviate some of the issues as, you know, multiple information sources, difficulty in navigating the aged care system, and difficulties with navigating through the aged care system. So that phone number on that slide there, 1800 200 422, is the best way to actually contact somebody and talk to somebody in person. And that phone line is open from 8 a.m. to 8 p.m. on weekdays. And for those who may not be able to access the system during the week due to work commitments, etc., it's open from 10 a.m. to 2 p.m. on Saturdays all across Australia. The aged care providers will be able to use this site as well to see how their services compare with others. So if you did actually have a look on the myagedcare.gov.au website, you will actually be able to have a look at the service providers that are available in your area and see what services they actually offer in comparison with other service providers, and try to choose the one that's actually going to work best for yourself. So if you'd like to flick over again. Now, the Commonwealth have actually introduced home care packages, which is basically the first step in My Aged Care scenario. So the Commonwealth's home support packages or home care packages actually are there to help people to live independently and safely at home. It is the entry-level home support for those who want to stay at home and are not actually looking at going into permanent residential care. You do need to actually qualify for this service, and the way you would do that would be to have a regional assessment service assessment undertaken, and they will look at your medical issues, mobility issues, what your care needs may be, what you're maybe struggling with, and what services can be provided to help alleviate those issues that you're actually having. Now, while the government subsidises quite heavily in relation to home care packages and residential aged care in Australia, you are actually expected to contribute to the cost of your home care package if you can afford to do that. And we'll actually have a look at some of the fees that may be payable during this session that are payable directly to a service provider. If you could flick to the next slide, please, Andrea.
Mm-hmm. Carer Gateway.
Now, the Carer Gateway is a website and a phone line that is actually there to provide support to carers, as well as help for the person who may have some mobility issues or may be suffering from an illness. There is actually also help for your carer. So it's a national online and phone service that provides practical information and other resources in order to support these carers. So it's quite interactive. The phone line is actually supported by counsellors who are aware of the types of issues that carers have. So they're a great resource to actually talk some problems through, or to actually just bounce some ideas off, or just to discuss some issues that you're having, and they can help to either just listen or to resolve some issues that you may be having. So the Commonwealth Respite and Care Link Centre number is also on that slide, and they can actually organise some respite care. So you may need a short break, whether it's just a few hours a day or part of a day, or more longer term breaks, so day breaks, overnights, weekends, a couple of weeks at a time. They can actually organise a convenient respite service for you to actually take part in. So that's actually a great resource as well. So if a carer has some things that they actually need to do, whether it's just to pop out and do the shopping or pay the fortnightly bills, etc. You can actually organise some short-term respite in order to do that and have peace of mind while you're doing that. Okay, so next slide. So I haven't dropped out?
No, all good.
No, I've actually just lost the screen, so just bear with me. Determining care needs.
I think that might have been me. I think everyone lost the screen.
No, that's okay. We're back again. Sorry about that, everyone. In order to determine care needs, you are the best person to actually work out what needs that you actually have. You can discuss it with your family, your local doctor, health workers, friends, neighbours, anyone who basically will listen and help you to talk through about what assistance and support you actually may need. So you may be looking at staying in your home for as long as possible, or if you cannot do that anymore, you may actually be looking at going into respite care or residential aged care. So in order to, if you want to flick over to the next slide, the flowchart just keeps going. Thank you. So in order to go into home care packages, as we've discussed, you do need an assessment, and that is called the Regional Assessment Service. If you're actually looking at going into aged care, the aged care assessment team will actually undertake what we call an ACAT assessment, which is just a little bit more complex than the assessment in relation to home care packages, but it still discusses what your needs are, what your mobility issues may be, what your medical requirements may be, and they will actually determine whether you're eligible to receive that support. So next slide. Okay, so at the moment we're just talking about the at-home care. So home care packages, we're going to go into what services they actually provide and the fees and charges. So this is the care and the support that you receive while you're still living in your own home, and the support and services that can be provided while you're doing that. So with regard to home care packages, if we can go through to the next slide. Wonderful. Home care packages not only provide care and services, but they provide individual case management as well. It is consumer-directed care, so they will look at exactly what your requirements are. It is not a one-size-fits-all program. They will determine what your care needs are and actually determine the services that are going to meet those needs. There are 4 levels of home care packages. Level 1 is basically your lower entry-level package, which takes care of basic care needs. So you might actually only need some help with getting some housework done or getting the garden care done once a fortnight. So you might actually end up having somebody come in and do all your vacuuming, your mopping, cleaning your bathrooms, possibly doing some washing and hanging it out for you on a fortnightly basis. Level 2 would be low care needs. So that would possibly also provide some personal care assistance. So it might be helping with medications, it might be doing some light meal preparation, it might even be helping assistance with showering or getting your hair done, things like that. Level 3 package is more intermediate care needs, up to the level 4, which is high level care needs. So that would actually end up being, you might have a registered nurse or a healthcare professional come and visit you on a daily or every second day basis to assist with your showering, your basic daily care, getting you in and out of bed, getting you dressed, and more high care needs in that respect. So as I said, the services are tailored to individual needs. So you might not want any of those particular services, you might have other services that you would think might be appropriate, and that is actually up to negotiation with your service provider as well. So if we wanted to flick over to the next slide, it discusses the fees that are payable. So the basic daily care fee for a home care package changes in response to what level package you actually have. So there are 2 types of fees that you can actually be asked to pay. On the slide, it actually indicates what the basic daily care fee is. So again, $9.52 per day for a level 1 package. Now that is actually charged on a fortnightly basis, and it is $9.52 per day each day of that fortnight, up to $10.63 per day for a level 4 package. It works out to be a maximum of 17.5% of the single full rate of pension. Now, the second fee that we actually look at is an income tested fee. So some consumers may actually be asked to pay an income tested fee, and that goes back to the old adage of if you can contribute to the cost of your care, you are expected to do so. Generally speaking, the basic daily care fee may actually be absorbed by your local service provider, and again, that is up to negotiation with your service provider, but the income tested fee that may be charged would actually need to be paid, and it is an out-of-pocket expense. Okay, so there is a fee estimator on the My Aged Care website that we discussed earlier. It's actually really good and quite accurate. You would just need to know what your income is and what your financial assets are in order to determine what fees you may be liable to pay. And next slide. Now, there are safety nets in place, and there are always caps on the amount of income tested fees that may be applicable. If you're actually on a full Centrelink or DVA pension, depending on the type of pension for DVA, a full pensioner does not pay income tested fees. So the basic daily care fee would be the only fee that may be applicable to their home care package, and that fee again may be absorbed by their service provider, but that is up to negotiation with the service provider. A part rate pensioner who may have some additional income coming in from another source may actually pay up to an extra $15.24 per day on top of that basic daily care fee. And self-funded retirees may be requested to pay up to an extra $30.49 per day. Now, there is financial hardship assistance available, and if it is determined that you are in financial hardship and you have difficulties paying the fees and charges for a home care package or for aged care, we can actually look at reducing the fees or waiving them depending upon your own individual circumstances. So in that circumstance, the Australian government will actually come in and pay all or part of your fees and charges on your behalf if it is determined that you're in financial hardship. Now, don't be afraid to ask for assistance with regard to that. If you are finding it difficult, there is no harm in asking for and even applying for that financial hardship. Okay, so next slide. So now we're actually going to be looking at respite, residential respite care. So people may be familiar with the fact that there is actually respite care available within aged care facilities, and that is short-term care needs may be actually met. You can get up to 63 days per year without it affecting a carer's payment or carer's allowance, and they're generally approved in 21-day lots. So you might be looking at going into respite for a short period of time. It may be anywhere from 2 to 3 weeks at a time. Generally speaking, an aged care facility will let you know what the availability of respite is, and then they will actually charge you the equivalent to the basic daily care fee for residential care as part of their respite fee. So that fee at the moment is $51.63 per day. It is indexed in accordance with pensions, etc., on the 20th of March and the 20th of September each year. Previous to the 20th of September, it was actually $51.21 per day. So it doesn't change significantly. Now, if you're actually in a residential care facility that is providing you some short-term respite care, but they also offer extra services like getting your hair done, having newspapers delivered, having a glass of wine at dinner, other services that they may actually provide. It could include pay TV, for instance. those are extra services that you will need to negotiate with the aged care facility. But if you're actually in respite care, you can expect to pay $51.63 per day. And next slide. So now we're actually going to have a look at the residential care. Prior to the 1st of July 2014, I think it was, there was no distinction between, there was a distinction between high level and low level care. Now there is no distinction between the level of care. If you need residential care, you would actually just go in as a residential care resident. So the next slide. Now, that basic daily care fee that we spoke about with regard to respite is $51.63 per day. Now, that actually covers these types of services. So it covers your accommodation services, so the administration of the aged care facility, maintenance of grounds, buildings, your gas, your electricity, other forms of utility such as water, etc., all your bedding, getting your washing done, basic toiletry goods, all your meals, your social activities that are actually contained within the facility, and any emergency assistance that may be required, and also personal care assistance if you do require that. So that is just talking to staff, having your showering and personal hygiene needs met, administering medicines and carrying out different treatments, your rehabilitation programs, etc. So that is what the basic services fee actually covers, and most people receive this care and service without having to pay any extra services fees over that $51.63 per day. So can we go on to the next slide? Now, this picture is one of my personal favourites. I love this. So we discussed just briefly before extra and optional services. Each aged care facility will have different services that they actually offer. Some will offer extra services, some may not. Those particular fees are determined by the aged care facility, and you can actually sign up to one, none, or all of those if you would like to. There are just fees in place to cover those. So it might be unlimited hairdressing that you pay a daily fee for. It may be pay TV. There are fees that would apply. Some facilities will actually have a fee that will stand. For instance, you might actually have a phone system in your room that will charge you on a daily basis for unlimited access to that. And it's up to you whether you actually would like to sign up for that type of service. They generally publish their extra service fees on the My Aged Care website, but if you're not sure, it's always worth a phone call to the aged care facility that you may actually be looking at entering. And your next slide. Now, the fees and charges that we're actually going to talk about are based on the new rules from entering residential aged care on or after the 1st of January 2017. The rules have changed quite significantly through the years, so we're not going to really discuss the different rules that apply to residents who entered care prior to this stage. But if anyone does actually have any questions about care, entering care prior to that date, or even if you may actually be under the old prior to the 1st of July 2014 rules, we can actually answer those questions later on if you would like to. So next slide. Now, the accommodation costs are generally the bulk of the costs with regard to aged care. That's going to be your highest fee payable if you're liable to pay that fee. Now, the Australian government pays for the bulk of aged care in Australia, so it is a heavily subsidised industry. But as with all aged care services, you actually may be asked by your service provider to contribute to the cost of your care. So that actually depends upon your income and assets as to whether you may be asked to pay an accommodation payment. So this is accommodation for the home, basically the aged care. The actual room that includes the floor, the ceiling, the walls, the windows and the door. Doesn't include anything inside the room. That is covered by that basic daily care fee. So the amount that you can be asked to pay for your accommodation will be based on your income and assets. And it might be one of the following. So we look at if your income and assets are below a certain amount, you will have no accommodation costs that are payable. You will actually have the Australian government paying all of your accommodation costs on your behalf. You will still be liable to pay that basic daily care fee, but the cost of your actual room will be paid for by the government. If you are required to pay part of the cost of your accommodation, you will be assessed to pay an accommodation contribution. So that won't be the full cost of your room, because the government will actually pay a portion of that on your behalf. If you're actually requested to pay an accommodation payment, so that would be a lump sum payment, when you actually enter care, then you are paying for the full cost of your accommodation. Now, you would need to have your income and assets assessed in order to determine whether you're liable to actually pay an accommodation cost or not. So if we can go to the next slide.
Is that the one with the lump sum on entry?
Yes, yes. They don't change a great deal, because the accommodation costs are quite a complex scenario. So a lot of people have spoken to their neighbours, friends, relatives, and they've talked amongst themselves and went, oh, I can't afford to enter aged care because I have to come up with $450,000 just as an entry contribution. So that would actually be considered your accommodation cost. It's not applicable to everybody. So you would need to have your income and assets actually determined in order to work out whether you would be liable for that cost. If, however, you are liable to pay that accommodation cost, you can pay it as a lump sum on entry. So just say your room is worth $450,000, for example, then if you are able to afford that $450,000, you can pay that as a lump sum when you enter care. Your accommodation costs, therefore, are then fully paid for. You may decide to elect to pay an ongoing payment. So that would be a daily accommodation payment, and it would be the equivalent to a rental charge on an ongoing basis that would be billed monthly. So if you can't afford to pay a lump sum on entry or choose not to do that, you would be looking at paying an ongoing payment. Or alternatively, a lot of people actually choose to pay a combination of both. So they might not be able to afford the full $450,000, but they could pay $200,000, for instance. So they'll pay that lump sum payment of $200,000 and a daily accommodation payment for the remainder that is unpaid. So you've got quite a few different options to look at when you're looking at the accommodation costs. If you wanted to flick over, we'll get into that a little bit more shortly. So the other fees that may be payable, and these are ongoing fees, is that basic daily care fee of $51.63 per day that we discussed earlier. There may be a means tested care fee applicable depending upon your level of income and assets. The basic daily care fee and the means tested care fee are actually determined either by the Department of Human Services Centrelink or the Department of Veterans Affairs, depending on whether you're actually getting a payment from either of those departments, or if you're a self-funded retiree. So the extra services fees that we discussed as well, which is your extra hairdressing, your Foxtel or your Austar, your pay TV, newspapers delivered, things like that are your extra services. You can actually opt in and opt out of those depending upon your negotiations with your aged care facility as well. So I just wanted to, if you wanted to flick over to the next screen, I just wanted to clarify a few acronyms that people may actually discover when they're trying to navigate through the aged care system. So these are all with regard to your accommodation costs. So there is a refundable accommodation deposit, which is a RAD. Nursing homes will actually use these acronyms as well, so just be mindful of that. That is if you are liable to actually pay, based on your income and assets, the full accommodation payment for your room in the aged care facility. That is a refundable accommodation deposit. Now, if you pay that lump sum payment, that is how it sounds, it is completely refundable back to yourself if you leave the facility, or to the estate if you pass away. So if you elect not to pay a lump sum payment and you may elect to pay, say, an ongoing rental charge, that is called a daily accommodation payment or a DAP. So those two are actually applicable if you're looking at paying that full accommodation deposit. If, however, you've actually been assessed that you're only liable to pay an accommodation contribution and the government is actually subsidising your accommodation in the aged care facility, you might actually be looking at paying a refundable accommodation contribution, or a daily, which is a RAC, or a daily accommodation contribution, which is a DAC. Now, the RAD and the DAP are lumbered together. That's when the full accommodation payment needs to be paid. The RAC and the DAC are lumped together as well, and that's when the government is actually subsidising part of your care costs. So they're just terms to actually look out for, because the nursing homes and the aged care facilities will actually start talking about those very quickly. And if you're not aware of what those terms mean, you'll get lost very, very fast, unfortunately. So if we wanted to actually flick over to the next screen, it gives a better understanding on where somebody may actually fit in relation to whether they'd have to pay an accommodation payment, a contribution, or whether they'd be considered lower means and the government actually subsidises their full accommodation costs. So on this chart, we actually have the lower means category. So in the yellow, right in the left-hand corner. So people who go into residential care as low means will actually get an assessment letter telling them that their accommodation is fully supported. They will pay the basic daily care fee only. Their accommodation costs are paid for by the government, and they do not pay a means-tested care fee. Now, to meet that qualification, you would actually need to have income of less than $27,464, just on that bottom axis there, and total assessable assets of less than $49,500. So if you come in that little box there, you will not have to pay that, for example, $450,000 lump sum payment to enter residential care. We can look at the blue box next, which you would be considered moderate means. So if you come within that blue section, you would pay the basic daily care fee. You would also be liable to pay an accommodation contribution. So the assessment letter that you'll actually receive will state that your accommodation is partially supported. So that a daily accommodation contribution would need to be paid. You would also pay that basic daily care fee, but you do not pay a means-tested care fee. Now, your assets would need to be lower than $169,079, and your total income would actually need to be under $69,317. Now, if you're actually in that white section, sort of up high and to the right, you're considered to be in the higher means category. So your assessment letter will actually tell you that your accommodation is not supported. You would negotiate what you actually pay for your accommodation. Different aged care facilities will actually have different room prices applicable. They might have the one type of room that has one price attached to it. They may have several different rooms that are different sizes, different facilities, etc., that have different prices attached to it. They're the advertised room prices, and all of that information is actually available on the My Aged Care website. However, you can actually still negotiate a different room price with your aged care facility. So if they might have an advertised room price of $450,000, they also may have empty beds and nobody on the waiting list. You might be able to negotiate a lower price for that room, which overall would mean that your accommodation costs would be lower. If you're in the higher means category though, it would generally mean that your assets are over $169,079 and your income may be over $69,317. Even if your income is actually lower than that, if your assets are over that $169,779, you would be assessed to actually pay that accommodation payment. So you may also be assessed to pay a means-tested care fee, depending upon what your income and assets actually are. Okay, so we might click over to the next slide. Now, a lot of people are confused about who actually does the assessment. So the Australian government will actually conduct the income and assets assessment. That may, as I said, be either the Department of Human Services Centrelink or Department of Veterans Affairs. If you're receiving a DVA pension or payment, the Department of Veterans Affairs will actually do your aged care assessment for you and will do your ongoing reviews on your care and your fees associated with aged care. If you're on a Centrelink payment or if you're a self-funded retiree, Centrelink will actually undertake your assessment. There are different forms to fill in, and you're probably best to contact the Financial Information Service or your local Centrelink office to determine what forms actually need to be completed. The main thing that has actually changed since the 1st of July is if you're actually on a full pension and you don't own your own home, for instance, you don't actually need to fill in a form for an aged care assessment to be done any longer. You can just ring up the aged care assessment team and have an assessment done over the phone. The most important thing to actually consider, though, is your Centrelink record up to date and accurate before you do that? If you haven't updated your bank account details or any shares or managed investments you may have, or even the value of your home contents in the past 2 years, I would actually contact Centrelink to have all of your details updated prior to getting your aged care assessment done. So we can either look at the information that is already held or we will ask for new information if you're a self-funded retiree and we don't have any of your personal information with regard to your income and assets on file. Now, a lot of people don't want the government to actually know what is actually going on in their financial world, and you are more than welcome to not disclose your assets and income if you do not wish to do so. However, if you do not do that, you will actually be assessed to pay the maximum accommodation payment and the maximum cost of your care until the annual and lifetime caps are reached. So if you're a self-funded retiree who has a significant amount of means, you may prefer to go down that road. However, if you're just an average Joe Blow down the street who has worked all your life or has had significant illness that stopped superannuation, etc., from accruing, you are probably best to actually disclose your assets and income so we can have an accurate assessment for you. Otherwise, it does get to be quite an expensive exercise because there are no government subsidies for those who don't disclose that income and assets. Okay, so I'm not quite sure if everybody actually out there knows how Centrelink and the aged care system determine what income is. So if we want to flick over to the next slide. So income is generally, it's the normal meaning of the word. So we've got employment income, we've got any rental income from investment properties or Airbnbs, etc., that you may actually have, any type of business income, any superannuation pensions, or if you've actually cashed in superannuation and got an income stream, we will actually look at that as well. Any overseas pensions that people may be receiving or overseas income they may be receiving, and any income and distributions from family trusts that might actually include farm partnerships, etc., and deemed income on financial assets. So what we actually don't look at is periodic income from reverse mortgages. We do not assess that as income, and that may also be the pension loan scheme that Centrelink offers. We also exclude the pension supplement, the minimum and the energy advance amount for pension purposes. So if you're receiving a maximum Centrelink pension of say $933.40 per fortnight, there will be around $70 odd that we won't assess as income because that is actually made up of those pension supplements and the clean energy supplement amounts. So if we flick over to the next screen, we'll talk about financial assets. And this topic is very dry, so I do apologise. Financial assets include all bank account details that you may actually have, any cash and term deposits and cheque accounts, any managed funds, shares and securities, any short-term income streams that you may actually have purchased, any loans and debentures, gold and other bullion, and excess gifts above the threshold. So if you've actually given money away to family or friends, etc., that is over that $10,000 per year threshold that Centrelink allows, anything excess to that will actually be counted as a financial asset. So basically it will be counted like you actually still have that money in the bank. So what we look at when we determine what income you may be receiving from a financial asset is based on the deeming principles that Department of Human Services Centrelink adopt. So if we wanted to flick over to that next slide, deeming is explained a little bit more. So all financial investments are aggregated together. So we add everything up together. So any cash, shares, bank accounts, managed investments, any financial assets, so all your gold, bullion and silver that you've got hidden in the basement, we actually look at the value of that, all added up together. Now, if you're a single person, the first $51,800 is assessed that we actually assume that you're receiving 1% interest income on that. If you have more than $51,800, anything over that is actually assessed like you're receiving 3% income on that. And for couples, that first threshold is $86,200, but the deeming rates haven't changed, like they don't change between singles and couples. A lot of people may be familiar with our previous deeming rates. They've actually come down effective from the 1st of July this year. So a little bit of information about how it works. People will actually always say, but I don't get 3% on the money that I've got in the bank. We actually look at, you have a choice on how you invest your money. If you invest it wisely, you're probably better off under our deeming rates. If you actually just have all of your money in the bank, so just in a normal sort of savings access account, you actually may be worse off if your income is affecting your pension under our deeming rate. So on the next slide, we've actually got an example of how we can look at income and deeming from that, income or the financial assets, and see how we actually look at it and what we're assessing. So if you wanted to flick the slide over. Excellent. So the example that we've got is Brian is single. He has a few different investments. So he's got $4,473 in the bank. He gets, actually it's not a bad interest rate compared to today's marketplace, 0.45% interest on that on a yearly basis. He also has $72,000 in a term deposit that he's getting 2% on, which, you know, is probably an average interest rate for term deposits at the moment. He's also got $28,000 worth of different shares that he's invested in, and they might actually be paying different dividends, but the total of those dividends he receives over the full year is $1,140. So in total, he's got $104,473 worth of financial assets. And in reality, he's making $2,600 per year or $100 per fortnight in income on those investments. Now, under our deeming rates, we actually will look at the first $51,800 of Brian's investments at 1%. We look at the remaining $52,673 at 3%. We've worked that out and added it together. Based on our deeming income and our deeming rates, we're assessing Brian to be receiving $2,098 or $81 per fortnight on those financial investments. So you can see the difference there. In reality, Brian is actually getting $100 per fortnight income from those investments, but for Centrelink purposes, we're actually only assessing him to be receiving $81 per fortnight. So because Brian's actually got some shares that may be paying quite okay dividends at the moment, he's actually better off under our deeming rates. Now, the reason that I'm actually explaining that to you is for aged care purposes and for pension purposes, we will actually have a look at the income that you're earning from the deeming rate as part of your income that is added to your pension. And we will work out what that income is to determine what your aged care fees will be. Okay, so the next slide, Andrea. So with regard to the asset tested fees, it's based on the assessed assets. We run on the aged care rules run under the same rules as the pension rules. Now the home is actually included in the assessment unless a protected person is living in the home, and we'll get to that in a moment about what a definition of a protected person is. Now for aged care purposes, it works a little bit differently to pension assessments. The value of the home is capped at $169,079.20. Now, for couples, that amount is each. For a single, that amount is just $169,079. So you'll actually notice from the slide that we talked about earlier, if your assets are over $169,079.20, you will actually be assessed to pay an accommodation payment. So the cost of your care will not be supported by subsidies and fees from the Australian government. So for pension purposes, the value of your home is actually exempt. So we don't look at that value at all. If we wanted to flick over to the next screen, we will look at your home being exempt if it is actually still being occupied by what we call a protected person. So there's 3 different classes of protected person. It could be the resident spouse or a dependent child that is still living in the home. It may be a carer who is eligible to receive a pension or other income support payment who has actually been living with the person going into residential aged care for a period of 2 years or more. Or it could be a close relative who is eligible for a pension or other income support payment who has lived with the person looking at going into aged care for 5 years or more. So you might have a grandson or a granddaughter, for instance, who may be on New Start payments or some other form of income support payment that has actually just been living with you for an extended period of time for 5 years or more, but they may not have been caring for you. If they stay in the home, after you go into an aged care facility, your home will not actually be included as an asset and will be exempt for aged care purposes. If, however, the home is vacant or not being occupied by a protected person, it will be included as an asset and capped at that $169,079.20. Okay. You may actually lose the principal a protected person exemption status if that protected person subsequently moves out of the home. So you would need to advise either Department of Veterans Affairs or the Department of Human Services Centrelink if that actually happens. So if we flick over to the next slide, a lot of people are actually concerned about how quickly they have to pay a lump sum payment for their accommodation payment if they're liable to pay that. So they may be waiting for their assets or their term deposits, etc., to mature. They may need to liquidate some assets, so that may take some time to make that payment. Residents actually have 28 days after permanent entry to a residential aged care facility to determine even if they wanted to pay that accommodation payment as a refundable accommodation deposit or a daily accommodation payment. So your first 28 days, you've got that time to decide what you actually want to do. After 28 days, if you've decided that you actually want to make that full payment, so that refundable accommodation deposit in full or even in part, generally speaking, it's up to negotiation with the aged care facility. Generally speaking, however, you do have 6 months to make that payment. In the meantime, however, you will actually be charged a daily accommodation payment on a monthly basis for staying in the aged care facility. So a lot of people also don't realise if they make that refundable accommodation deposit, but they only make a partial accommodation deposit, you can have some of your daily accommodation payments or your ongoing rental charge or other fees, if you need to be deducted from that refundable accommodation deposit. All you need to do is let the aged care facility know. If you decide that you don't want that to happen, it will not happen. So there are no deductions from that unless you ask for those fees to be deducted. So we flip over to the next screen. As we've talked about, the daily basic daily care fee is actually set at the moment at $51.63 per day, and that will actually stay in place until the 19th of March next year, where it will be indexed again and in line with the maximum rate of a single person's pension. So that won't happen until the 9th or the 20th of March. It may go up slightly depending upon how the pension actually changes. So if we flick over to the next slide. So there are safeguards in place for residents in an aged care facility. So from the 1st of July 2014, very strong safeguards have been put in place to ensure access to care for those who cannot afford to contribute to the cost of their care or accommodation, which includes grandparenting arrangements for residents already in care. So they won't actually need to change over to the new system if they were in care prior to the 1st of July 2014. However, they can do so if they want to, depending upon certain criteria being met. There are annual and lifetime caps applicable to the means-tested care fee. So just say you are a self-funded retiree or you have a significant means-tested care fee to pay. Once you actually reach that annual cap of $27,754.52 in the course of the year, then you won't have to pay any more means-tested care fee again until the anniversary of when you entered permanent care the following year. So if you have been merrily paying quite a high means-tested care fee, you may actually find that by about the 10th month or the 11th month, your bills will no longer actually contain that means-tested care fee. The basic daily care fee and the accommodation payment will still need to be paid, but that means-tested care fee is capped. Now, there is a lifetime cap of that means-tested care fee as well, which is $66,610.90. Now, as we've discussed, there are safeguards on the family home. So if you have a protected person living in your home, that will actually be counted as an exempt asset, and we won't actually look at that. And there is financial hardship available to those who need it. You cannot be forced to leave an aged care facility purely because you cannot pay your fees, but it is actually up to either yourself, power of attorney, or your nominee to contact the relevant authority to discuss hardship. So I would be saying that Centrelink would be the first point of call for that. And don't be afraid to ask, because there's no harm in actually putting in an application, and we can go through the eligibility criteria with you at the time. So if a protected person leaves the family home for aged care purposes, it will actually be assessed as an asset up to that capped rate of $169,079. If you decide to sell the family home, and a lot of people will actually do that. Oh, sorry, I've actually gone on. If you wanted to flick over to the next screen. Sorry, Andrea. Yep, that's great. So if you do sell the family home to actually pay that refundable accommodation deposit, and a lot of people do that, that sale of the family home actually results in losing that capped value, and the whole proceeds of the home is actually assessed for aged care purposes. What you need to also be aware, though, is if you do decide to pay that refundable accommodation deposit to the aged care facility, please let Centrelink know that you've done that, and please bring a copy of the receipt into us, because the refundable accommodation deposit is exempt as far as Centrelink goes in relation to calculating what your pension should be. So if you've actually sold your family home or cashed out term deposits or what have you to actually pay that, we will need to adjust your record accordingly. And sometimes it may actually mean that you may be entitled to receive more pension if you're not already receiving the maximum. Can we flip over to the next screen? So there are just a couple of pension assessments and considerations to take into account with regard to aged care, and we're going to go through those on the next screen from that. Excellent. So if you're a member of a couple and your loved one is actually looking at going into an aged care facility, and you are living apart due to circumstances beyond your control, please come in and let Centrelink know. You will actually be you will actually be entitled to have your pension change from the couples rate to a singles rate to take into account the fact that you are separated due to illness. So the couples rate at the moment is $703 per fortnight each. The singles rate is $933.40 each per fortnight. That's the maximum rate. So you may actually find that you'll be entitled to receive more income from your pension to take into consideration the fact that you're technically running 2 households at the moment. Rent assistance will cease unless your partner is actually still living in rental accommodation outside of aged care. And as I said before, the refundable accommodation deposit is an exempt asset for pension considerations. We need to know when that refundable accommodation payment has been paid. As I said, your pension may increase. If we flick over to the next screen, the former home for Centrelink purposes remains exempt from a pension assets test for 2 years from the date of permanent entry to care. If your partner is actually still living in the home, it will be indefinitely exempt because it will be exempt basically because it's their principal family home. So that is something to be mindful of as well. We will contact you after 2 years if we still believe you own your own home to actually find out what's happened to the house, whether you still have that, to determine how it needs to be assessed after that 2-year period. And the next screen. So the exemption period will generally end under a few different circumstances. Most of the time it will end obviously if you sell it, because the proceeds of your family home will actually be assessed as an asset for Centrelink purposes. It depends obviously on what you actually do with those proceeds as to how it will be assessed. If you sell the family home and just put that money in the bank, it will be assessed under our deeming rules as a financial asset. If you decide to actually rent that out, for instance, we may have a look at the asset value of that home and the rental income that you'll be receiving under any lease agreement that you may actually have and work out what your pension may be in accordance with that. Now, when the end of the exemption period, so that 2-year exemption period ends and you actually decide to keep your home, we will actually assess that as an asset depending upon what you've done with it. So if the asset is actually rented out or if it's just sitting vacant, we will look at the value of that asset. But because you'll not be considered a homeowner anymore, the higher non-homeowner asset test thresholds actually apply. So you may find that it may not affect your pension a great deal if you're still under that higher threshold. And again, there's always hardship that may apply under those circumstances, and you need to ask us if that is actually applicable to your circumstances. Next screen. A lot of people and ah about selling the family home, and this is the last thing I'm going to talk about today. You may actually want to keep the family home. You may be sentimental. You may have lived there for the last 60 years. You may want to keep it in the family. It may have some heritage value. You may actually decide to keep that and rent it out so that if you do pass away, that is rental income that will go to your estate, and then your beneficiaries of the estate can decide what to do with that property. A lot of people actually think that even when they enter permanent aged care, they're going to get better and then they're going to go home. Sometimes that does happen if they just need their medication sorted out. But generally speaking, once somebody will get into an aged care facility, a lot of the time they actually find that they like it there, and so they decide to stay. And then the decision needs to be made on what to do with the family home. So if you've got a loved one still living in the home, then they will obviously stay there and you can retain the home. But it's time to start thinking about what you may actually do if that situation arises. So if you wanted to flick over to the next screen, Andrea. A lot of the time it's actually easier just to actually sell the home. If your home is ready and marketable right now, depending upon what the market is like at the time, it may be more timely, more cost effective, and a less effort than managing a rental property just to sell the home and then decide what to do with the proceeds. If you do sell the home, obviously depending upon the home's sell value, you've got some available capital that you can actually look at either paying your refundable accommodation deposits or making other investment choices. And by the time, if the time comes and you do pass away, if the home is already sold and the proceeds are already dealt with, it is much simpler for the executor of the estate to actually deal with the assets that are left and to divvy them up in accordance with the terms of your will. So there are a few things to actually think of when we look at what to do with the family home. And if we flick over to the next slide, that gives us time for some questions.
Thanks, Carmel. Given that it takes a bit of time to type in questions, I'm going to go through some sort of not outtake, but housekeeping at the end, if that's what you'd call them.
Sure.
Slides to give people a chance to type in their questions. But again, a reminder for everyone that's online, open up the control panel, open up the question area and type in your question, and we'll have a look at those together. So we just want to remind you that MS Connect is here to help as well, as is that Financial Information Service Officer number. Keep both those numbers handy and certainly ring and ask questions. There's some reasons there why you might call MS Connect. Peer support is another valuable option for you, and I'll say that in terms of a number of things. That can be a great opportunity to talk to someone else who's been through some of these issues. It can, as a group, it can be a great opportunity to touch base with other people who are similar age, going through similar circumstance, and you can support each other with your knowledge. We also do that by telephone. And Carmel was telling me before that in local areas, quite often the local peer support group will have a guest speaker from the FIS office or from Centrelink to come and talk to the group. So it can be another great way of having your questions answered. So keep that in mind. Peer support is a fabulous resource there for you. That's an online tool, not perhaps particularly relevant today, but look, if you're signed in today, but actually you're still working, we would love to also support you in your employment. We can help you navigate the NDIS, and we can also help you navigate My Aged Care. So Carmel talked through that process earlier in today's presentation, but if you're still feeling a bit anxious about that, going through MS Connect can be a way of alleviating your concerns. After the webinar, there'll be a survey as well that we'd encourage you to stay on and give us some feedback. But let's have a look at what questions have come through. I will also couch this in terms of if there are questions that are very specific, that might be something that is better for me to send to Carmel and have her answer specifically, which might be this one, Leslie, because this looks quite an involved question. Let me just read through it. And encourage anyone else, pop in your questions while we're here.
Andrea, while you're reading that, I just wanted to say that if anybody is also interested in having a financial information service appointment made for them in their local area, and we are all over Australia, I'm more than happy for them to shoot through their details to you. I can give them a call this afternoon and get something booked in with a financial information services officer that will actually allow them a full hour or so appointment where they can actually talk about their individual circumstances and get a really good idea on where they're sitting, and it doesn't need to be just about aged care.
That's fabulous. And I'll just add a personal one to that. When my in-laws and my mum were looking at aged care, we did have that interview with the Financial Information Service, and it was, I can't tell you how valuable it was. So it's an absolutely great service, and Betty's just said the same thing. It is a great service. And I'll put an aside in that too. I was meeting the FIS officer with my brother, who is now retired, but my brother was able to get some advice for his personal situation as well. So we had...
and that's always the way it works. We're just happy to help.
It was great. Now, Leslie's question is quite involved, but what it boils down to is asking a question around the limitations of the different aged care packages. Now, you might not be able to answer that today, Carmel, but that actually, as I was listening to what you were talking about, that was something that I wondered if we could spend more time on.
Home care packages?
In another session, yeah.
That would be good. The home care packages, that was a very, very shortened version that I went through, purely because aged care takes quite a great deal of time. But we have a specific home care package as well that I'm happy to run through. And I do understand the limitations of the aged care packages or home care packages out there in the network. There are a significant number of service providers now in place, and all of those details are available on where they're located and what they can provide, and more importantly, the fees that they charge as well on the My Aged Care website. So My Aged Care isn't just about aged care. It will cover home care packages and respite care. If you're looking at a higher level care package, say a level 3 or 4 package, there is a little bit of a waiting list to get those services in place. And I'm assuming Leslie is referring to that type of limitation. Would that be correct?
Yeah, a limitation on timing. Yeah.
Yes. Yes.
But I might connect you two separately.
That would be great. I'd look forward to that.
Yeah, terrific. Pam's popped in a question that's around eligibility for support at home. She has identified she could do with some home care help like bathrooms, vacuuming, mopping. She has primary progressive MS and she receives a part pension. So would that be a matter of going through My Aged Care to determine whether she's eligible?
Yeah, eligibility for home care packages and aged care is not determined on income and assets. The fees are actually determined on income for home care packages and income and assets for aged care purposes. The eligibility requirements, though, for a regional assessment service centre around health issues, mobility issues, any limitations that Pam or anyone out there may actually have in getting those particular things done. You could just be recovering from an operation, for instance, and you may actually be eligible for a home care package for a certain period of time. So even if you're working, Pam, it won't preclude you from actually having a home care package. However, it depends upon the type of work that you're doing as to what your mobility is going to be. So medical professionals will do that assessment.
Okay. And something we often remind people who are living with MS is that when these assessments take place, you need to keep in mind how your symptoms fluctuate, and you might be quite different in winter to how you're able to function in summer, for example, with the impact of heat, or you might be different when you're particularly fatigued. So it's important to include those considerations when you're going through your assessment process.
Yeah, you're right. It is a point in time assessment. The medical professional will determine how you are on the day of your assessment, but they're registered or they're ex-registered nurses or still registered nurses and medical professionals that will do the assessment. As a general rule, they are fairly good at reading between the lines, and we all know you can have good days, you can have bad days, you can have terrible days. So you actually just need to be very open and honest with the person who is doing the assessment as to what your limitations may be.
That's great. That's fabulous. Thank you, everyone, and thank you, Carmel, for your time today. Again, if you have further questions, you know that you can always contact MS Connect and we can connect you with Carmel or connect you with the Financial Information Service. So please don't feel that you can't reach out even after today's session. That's what we're here for. So thank you for everyone being online, and thank you again, Carmel, for your time this morning. We'll look forward to seeing you at another webinar.
That would be great.
Thank you all. Bye-bye.